Okay, so we have an extraordinary guest with us, and he's not even a guest, he's a member of us. Mr. Richard Nelson, it's great to have you on, man. I really appreciate you coming on. We're gonna have a great discussion about some things you've researched. In fact, you put out a Seeking Alpha article that literally just came out, so we'll have a link for that in the description, along with some of your other info. But in the meantime, why don't you just take a little time to intro yourself and tell people who you are and what you do?
Thanks so much, Max. It's really a pleasure to be here. So I'm Richard Nelson. I currently work at consult. Sorry, I'm stumbling already, but currently work as a cybersecurity project coordinator for a consulting company within the DC, Virginia area. And within that, I work on different software and platforms as a service and helping get them onto the federal marketplace. It's a fantastic job. I really love what I do and get to work with awesome people on a daily basis. But in my spare time, I've always had a passion for investing and figuring out where the best places, or where I personally believe the best places are to put our money right now. Obviously, 2020, crazy, crazy year in investing in for investors. People lost money, people gained a lot of money. Um, and then they lost it again a little bit, but then they brought it back. Just crazy year. If you own Tesla, Square, Workhorse, Neo, any of the above, congratulations. You probably made some good money this year, especially if you bought in March or have been holding for years. But I really want to talk about 2021 and just the general decade that we're about to go into, because we're on the cusp, or not even on the cusp anymore. We are in the middle of the fourth industrial revolution. It's a tech revolution where we're seeing innovative technologies come in and they are totally changing the game, whether it be in the medical space. You're looking at Tesla and all these EV companies, they're going to change the world in terms of carbon point, like carbon, whatever, just carbonomics in general. And you got just the revolution of tech, like Zoom University. So my article kind of dives into a couple of ETFs that I believe will really thrive throughout this decade and going forward. So I guess the first one that I'll dive into is the ARKW ETF. So this is one of the actively managed ETFs that's been getting a lot of talk due to the success that the investors have had within it, and the active management that's been fantastically run by, kudos to Kathy Wood. Um, the main holdings were Tesla, Roku, Squarespace, all almost either 5% or above 5%. Tesla's at 10% of the portfolio. So obviously an ETF that's holding these three things, which are all up 400% since March, going to do well, uh, and I believe that that growth is going to continue because it focuses on the ETF. I should break it down a little bit more. It focuses on Internet of Things, IoT, and AI technology. Um, these are things that are going to be the future, whether it's being used in a medical sense or just to gather data, um, or just used to automate things. So those three uses, you're going to continue to see more and more of them, partially due to COVID-19 being kind of pushing, society was trending towards being like work from home, all this tech stuff was having an impact. And maybe it would have been 5, 10 years we would have seen all this stuff happen in 2030. But it happened in 2020. We couldn't leave our houses and we had to figure out how to do things. And, you know, this industry boomed because of it. And I don't see that trend stopping. Just because things start to return to normal, it doesn't mean that the impact that this has had is going to be over. It's not. And it's just going to continue to go further and further up. I believe that investing in an ETF that's actively managed, that has already shown that it can be ahead of these trends, is a great way to make profits. So that's why it is my first choice. And I can't wait till I get my next paycheck and start buying. um, then my second choice is iHack, which I looked between iHack, I looked at Cyber, and a few others. iHack and Cyber are two of the major ETFs that people look at when looking in the cybersecurity industry. And I think that not only do I work in it and I love the industry, but I think it's the best industry to possibly invest in right now. Because again, you have the COVID-19 effect where everything's gone online. Suddenly, people really need cybersecurity. And then if you look at the data that's shown in the past year, it used to cost around $42,000 to recover from a cybersecurity hack. Now it costs 84, so it's already doubled in a year. And then just looking at the industry in total, you have 3 trillion was spent on cybersecurity in the year of 2015. In 2021, we're expected to spend 6 trillion, so it's already doubled. Whether that was affected by COVID or not, it does, like, the industry's doubled. It's worth twice the value now. And by 2025, it's expected to nearly double again. So we're talking 10.5 trillion is the estimate currently. So with this increase in cost, and it all correlates to the amount of cybersecurity hacks that have been happening over the years. So we're in Q1 of 2020, we had a 37% increase in cybersecurity hacks. In Q2, it increased again. And it's since gone down a little bit as cybersecurity companies have been implementing their software, hardware, whatnot, to protect people from malware and other things that are related to that. So iHack is currently at around 2036 a share when I wrote the article. I believe that within 10 years, we could look at it being over $200 a share for this ETF. And I believe within 5 years, with the value of the industry continuing to double, we'll see it at $60 to $80, depending on how much growth we have. But you also have to look at the fact that not all countries have all this technology yet. They don't necessarily, not everyone has phones, not everyone has computers, but that's going to change over the years. People are going to have to be, with this revolution that we're having, people are going to have to be more like, they're going to get phones, they're going to get computers. And with that, you're going to see, again, an expansion of the cybersecurity industry because people are, with more products, there's a need for more protection. So that's kind of my thesis. With those two, I find kind of go hand in hand when you're looking at Internet of Things and AI technology.
I got a quick question. I don't mean to cut you off, but is the in terms of what these ETFs are holding in their portfolios, are they primarily US based companies?
With both these companies, ETFs that I'm talking about currently, yes, but the next ETF I cover will not be holding many US companies. So kind of just, I happened to pick those two that were holding mainly US, but one of the other ETFs I picked is a hedge against not only the US, but also China. So yeah, I can dive into that one if it's all right with you next.
Yeah, please. Yeah.
So speaking of people getting more computers and phones, as I said, when I'm looking at expansions of technology, I'm looking at India. So India currently has 500 million mobile internet users. But when the population is 1.3 billion, it's less than 50% of the population, which is amazing because it's more than the US population already. So with all the stuff that's going on between the US and China, and just the protests in Hong Kong and all these other drama, whether it's Trump or we'll see what Biden does. I don't know what Joe Biden's thinking in terms of China, but delistings, all these things, India presents an awesome opportunity to not only invest against China per se, as a hedge, but also just as a general growth play. I mean, you're talking about 800 million people on the planet that don't have mobile internet or don't have a computer, don't have a phone. So when you look at that, that's a humongous market. That's the largest market in the world where you're going to find people like that. This year alone, global investors put 38 billion into India. And the ETF that I picked for India was Invesco's India ETF pin. And in my article, you see I post a little chart here. Let me see if I can pull it into here.
Yeah, that would be great if you could share it on the screen.
Yeah, let me see if I can just share it through like whiteboard. I don't want to share my desktop's a mess. Let me see if I can share it with that. All right, I'll just share my desktop, my messy ass desktop. So can you see the sector allocation screenshot?
Yeah.
So I took this off of the ticker's pin, and it's the Invesco India ETF. So when you're looking at the sector allocation, you're going to find that the main thing that they're putting in is IT. So information technology, different types of technology, and this will all be utilized more and more as India gains more technology and more people have access to it. Also, you're looking at financials, as there's a low, high poverty rate in India currently, and the COVID-19 like virus has decimated it due to it being the highest, not the best healthcare in India, unfortunately, and also very high population density. It spells kind of a bad recipe for COVID, but it also spells a great time for financials to recover over the next decade for India. Energy, that's only going to go up as more and more people are consuming stuff and utilizing more technology. And then consumer staples and materials, this is kind of an easy play. If you're looking at the country that's growing the fastest and has the highest population density currently, you're going to end up having more consumer staples used and more materials used. So you're going to see more growth within those industries. So that's why those are one, two, three, yeah, the five biggest holdings within that, within this ETF, and I really like them. Each of those sectors for India personally. Um, and then, sorry, I'm reading over everything. Yeah, like I said, so that's kind of the massive market opportunity within India, to sum it up.
Great. I did have a question, not necessarily pertaining to this, but maybe just a little bit. So, as we know, Russia had, right, the largest unprecedented cyber attacks on the U.S. government.
Mhm.
So, how beneficial is this catalyst going forward? Whether it's for these individual ETFs, cyber stocks in particular, or the industry in general. Do you think the infrastructure of cybersecurity is already at a point where continued innovation perceives itself, or is it just getting started?
I think it's just getting started. I think that we're going to continue. I mean, you see these people who create, like, people, we evolve as society, we evolve, and we evolve based off what's going on in our world. You look at COVID and you look at the way people evolve through Zoom and all this technology stuff. And I think that the cybersecurity sector in general was taken off guard by it. I mean, nobody expected this stuff to happen. And I think it's going to continue to evolve with the switch to more things being more mobile and online. Then it'll catch up and then it'll surpass it. And we're always going to have, like, from now on, there's always going to be an issue where people get hacked. I had one family member I know, like, had money stolen out of their bank account. They called the bank, and the bank was like, "You got hacked. There's nothing we can do except give you your money back." I think that one day someone's going to make a phone call, and the bank's going to be like, "Yeah, we traced it down. Here's your money back. We're going to go get this guy."
Hmm.
Uh, and it all depends on people just continue, like these cybersecurity companies continuing to develop new software and protections against it.
Right.
And I also think that we're going to start to see between China, Russia, America, and just all these countries, maybe a little bit of a cold war that nobody really sees going on because it's all done through code and trying to hack each other and whatnot. We don't really hear about the U.S. hacking other countries. I'm sure it happens.
Maybe
That
so.
maybe so, maybe not. We wouldn't hear about it if it happened though. They'd keep it secret. I would definitely not know. Um,
That they would. Also, another question in mind is Palantir. What
mhm.
is Palantir doing? I mean, most people that are joining in the momentum, backing this huge outperformance in its stock price, they don't even know what they're investing in. Obviously, it pertains to cybersecurity, but in terms of their contractual obligations to their clientele, as well as governments, what exactly are they doing? Right, because they can't really disclose everything they do, right?
So I'm not exactly sure what Palantir is doing within like all sectors of government. I know that, but a lot of their contracts are based around tracking data for COVID and contact tracing currently, along with other things. So what Palantir is, in my opinion, it's a great tech company that's great at tracking data and acquiring it through their Gotham and Foundry and whatnot. I don't know exactly how those programs work, but I think that if they continue to win government contracts as they have been, and are the people that are keeping track of data, like data is worth a lot of money these days, and they'll keep getting if they keep being the person in charge of the data and in charge of getting it, then kudos to them. I like that. I like that, and I do like the company as stock. I owned it a little bit for a little while and then I sold it. But if it goes down, I would think about buying back in. Um, yeah, I think that they're a very strong company. The IP and they've obviously done well since the IPO. It's up like what it started at like $9 and now it's at or 11 dipped to 9 and now it's sitting in 25 to 30 range here or there. Gets sold off a lot of 30. So I think that yeah, I think they're a quality company that has a bright future. Um, they just got to be profitable, as it's been the issue for almost 2 decades.
Right.
But if they keep winning the government contracts and gather enough of them, they might become it. And then I also think that what they're doing for the government is great. I think that it's important as a business to hold government contracts because they're the most stable. I mean, the government's not going anywhere. As much as certain people want to overthrow it, it's not going anywhere.
Right. So, what subsectors of cybersecurity will outperform as well?
I think in terms of subsectors, what do you mean by subsectors per se in this? Are you looking at companies that are collecting data? Or are you looking for companies that are like antivirus?
Yeah, really the whole 9 yards.
I think I think companies that are collecting data will over time be the most valuable. I think that the ability, like, I mean, you look at Facebook and all those people complaining about people stealing their data, which I'm totally not
Right.
for. I think that it's a shame, but Facebook only wants that data so it can sell it to the advertising companies. So I think that looking at cybersecurity companies that are collecting data and people are okay with them selling it and they don't get in trouble and they're not getting antitrust suits, I think those are the companies that will win per se. But I think that there's going to be plenty of winners in the antivirus. Like if anyone develops a better, more secure way for people to transfer data and protect it, they're going to be able to win. So I think whoever protects the data the best and whoever collects it the best are going to be the two winners of the cybersecurity industry.
Okay, so data is clearly king.
Yeah.
Um, yeah, I couldn't agree more, although I don't know too much at all about tech, and maybe I really should after understanding just a little bit more about it, thanks to you. So with
I
that
think
being said, how are we going to proceed throughout the future? I know we talked about, the actual growth opportunities, looking forward for cybersecurity, whether it's in other emerging markets or solely domestically speaking. But what can we expect realistically coming out of cybersecurity, the sector, throughout 2021? And, and to add, in response to COVID, the responses, this shows kind of really a lot about what the federal government, their responses have been in response to black swan events like COVID, stuff like that. So, but what about cybersecurity, the sector? Are they going to respond, or what is their history of responding to black swan events?
I would say that the history of it's a very new industry is the thing. So there's not much history to it. You have the dot-com bubble burst, where obviously if you were a cybersecurity company, you probably weren't doing too well in the dot-com bubble burst because a lot of websites and whatnot crashed and a lot of tech companies crashed. But I think that at least looking at the most recent, we'll talk about COVID, talking about COVID specifically. I mean, iHack went down about 20, what was it? They were down to like $20 a share back then, and now they're at like 40.
Wow.
So that's a 100% increase in price, partially due to the nature of the COVID-19 virus and the way it affected our world and society. There was more need for cybersecurity, so it went up. Um, I think that as the vaccine rolls out and whatnot, you're going to see a very minor dip. I think, well, personally, I think that we're sitting in a little bit of a bubble right now in terms of the economy. But at the same time, I think there's a very high outlook on the future, which people stopped during COVID. People stopped investing in what they thought was going to do well right away, per se. I mean, not in a stock standpoint, but in the sense that like you weren't investing Coca-Cola in Coca-Cola because you wanted the dividend and you thought Coca-Cola was going to go up a few dollars. You were investing in Tesla because you thought that the EV car boom was going up a ton or whatnot.
Right.
The same can be applied to cybersecurity. I mean, everything's online, so when it stops going online, I think we see a slight dip. But then I think after that, it's going to rebound really strong from that small dip and will continue to flourish as more people begin to use the internet and more people are running into issues of getting hacked. I think that it depends on like how much, if one big thing I'm looking at is the cost of how much it costs to recover from a cybersecurity hack. If it goes up from that 84,000, I think that's a sign that it's going to continue to be a very much rising industry. I'm also going to look at how many internet users are joining either on a daily basis, monthly basis, yearly basis is probably the best way to look at that. And the percentage of hacks, if they continue to increase after COVID and after this not lockdown anymore, but everyone's
Right.
quarantining, trying to be careful, social distancing. If that trend continues, then cybersecurity could be up 200%, 300% by the end of the decade, I think.
Wow. So do you think that companies that are not collecting data or participating in any of these kinds of technological revolutions, do you think they're going to essentially just draw back and underperform because they're out of that race?
I don't think they'll necessarily underperform. It really depends on what their product is. Um, if like one thing that I always look for in companies is what is their product? What are they doing? Are they developing new products? So if you own something like an antivirus thing that's going to help protect the individual who's doing like computer chats on their Mac or whatnot, or owns their own small business and runs it off their own personal computer, I think that you're going to continue to see success as long as you have good software and whatnot. Um, it's hard to predict. It's hard to really say what'll come next. But I think that as long as these companies continue to have companies with solid products will succeed, and the companies that maybe, I mean, you're seeing a lot of companies these days with no product yet, just their stock rallying on hype. I think that those companies are going to fail.
Right.
As example A, Nikola. Um,
Uh,
but that's not a cybersecurity company, but that's just the first example that comes up in my head. Um, but I think that if a company has a good product like Palantir that's trusted and people, government, not only governments, but just corporations and people and whatnot fall back on those products, those are going to be the ones that have the most success. I think that there are a few overvalued cybersecurity companies. I forget the exact valuation of CrowdStrike currently, but I remember looking, it was like 10 or 20 times the value. I don't even remember. So that's one that I'm looking. Well, I personally, if I'm looking at individual stocks within the cybersecurity industry, I'm going to look at what companies do not look overvalued based off their earnings and how much they're making. And those are the companies that I would go for because I think that they will continue to grow with the estimated growth of the overall market.
Great. It's just kind of extraordinary to fathom that these VCs in Palo Alto are
Mhm.
throwing billions and billions of dollars into just fresh new ideas, not even something that's tangible per se. And it's just extraordinary because that's their idea of growth is to essentially pump more and more and more investment capital into the growth story. And it's companies like Airbnb and DoorDash that, biggest IPOs, this past year, and they haven't turned a profit in a single year simultaneously. So you wonder why they're getting all this VC funding. But then then you mention, Richard, about how, maybe it's not necessarily that they're going to underperform, but it's because their product or their product selection, their service selection is so superior that it will entail more of that funding to actually counter the cost of it, the cost of business. Because the cost of doing business, at least in those companies, is clearly tremendous if they're not turning a profit. So I think you're totally on board with that.
Yeah, I totally agree with what you're saying there. As you kind of, as you said, the product's the most important thing. I mean, you look at Tesla, for example. Have you been in a Tesla recently? They're fucking sick. uh,
That they are.
but at the same time, do I think that Tesla's worth what it's currently worth? Maybe not. But if Elon pumps another good idea out there, it's still gonna go up another $100, $200.
Right.
Um, it's just the way that people are investing lately. Momentum investing is big, future's big, but at the end of the day, people are only investing in these ideas because of the good product, um, or the potential for a good product. Although I really, really prefer when I can visibly see a product like Tesla compared to like the other EV companies. Although I
Right.
did see what is it, the workhorse endurance or whatever they're calling it. I saw one on the street the other day, so those look pretty cool too.
Oh yeah. So then companies like Fubo and Peloton and, some of them may or may not be classified as mania bubbles. And
Mhm.
I'm thinking all the way back to the tulip mania. I'm thinking about all these different bubbles that have occurred throughout our prehistoric history. And it's just interesting to potentially classify quite a few of these names today that's happening today as the next tulip mania. One of them, most obviously, is probably definitely Bitcoin. Um, and maybe I'd be curious to hear you talk about Bitcoin because I don't understand anything about it. And I'm missing out on a humongous percent gain in my pocket. And I don't know why.
So with Bitcoin, so I bought Bitcoin in March, and I'm just very happy I did. I already sold it. I did not think it was going to break 30 or 33 or whatever it's at. But Bitcoin is an anomaly, partially due to the low dollar value. I believe. If I may be mistaken, but the dollar is at an all-time low right now. And this rally comes right in line with when everyone got their stimulus checks. So clearly, there's a big FOMO going on, where people are like, "Oh, I got my $600, Bitcoin, Bitcoin, Bitcoin."
Yeah,
Um,
right.
but you're seeing like just general with crypto, you're seeing people pull away from the dollar and pull away from maybe even the stock market in general, and feel that they can make money in this currency that it's not really a currency per se. It's backed by a ledger. That's one day I was like, "What is Bitcoin backed by? Like, what is it?" And they're like, "Oh, it's a blockchain ledger." And I was like, "Great! Now I got to figure out what the hell blockchain ledger is." Um, but it's basically just showing the transactions, and like stocks, there was a halvening this year, which is part of the catalyst of the event. So essentially, that's makes if you own one Bitcoin, it would now be worth 2 Bitcoins, I believe. Um, and that's one of the big catalysts within the whole Bitcoin craze right now. But I think it's more just people are looking for a way to put their money in something that's not a stock, not an ETF, just kind of something different. And it's a global thing. It's not just, the US dollar or the euro or something. It is a global currency that is worth the same no matter where you go, per se. Um, and so I think people are looking at that as like, oh, this might be the future because it's global and it's not just a single individual country. And in my opinion, a global currency could possibly be the future. I just don't know per se if it's Bitcoin. Um, I could see like when you watch like these sci-fi shows and they have like the whole world runs on a single currency because the whole world has been united in like peace or whatever, and there's world peace and they're fighting like people on Mars or something. Like maybe then like their currency might be something like Bitcoin that's being used because it's all going to be under the same thing and the same government. But I don't know. I see the SEC hopping in like they did on XRP, um, and kind of shooting this down to a degree. I think that long term Bitcoin still could be a profitable investment. I just don't know if it is at $33,000 right now.
You get people paying these 40% premiums on Grayscale Trust, and people are just blindly buying it
Mhm.
because other people are buying it. I totally agree. I think there's no intrinsic value backing it. In fact, there's no value at all backing it. Bitcoin is just Bitcoin. And ironically, you can't really have a Bitcoin, you can't make a Bitcoin without gold.
Yep.
So I know that changes the conversation to a whole new conversation.
Yep.
So maybe that'll be another video. But yeah, it's just very interesting with this Bitcoin hype. We saw Bitcoin go up 18 folds in 2017,
Mhm.
but people are still flabbergasted by the fact that it's up what's it, fourfold only,
Mhm.
this year alone. So nobody was, obviously many more people, institutions are on it right now, next to 2017, nowhere near to as much volume and saturation in Bitcoin. But I mean, like I just said, in 2017, Bitcoin went up 18 folds, and then the preceding year it fell 70, 80%, and nobody saw it coming. But now, we're in the middle of this surge to all-time highs. I think what, 32, 33,000.
I think it was around 33 earlier today. But you mentioned Grayscale Trust, which I think is a very interesting ETF slash whatever you want to consider it, Bitcoin play. Um, so that's how I did my investing into Bitcoin in March. I just didn't want to deal with the stress of having a Coinbase or doing it through something else,
Right.
uh, and I didn't want to buy a full Bitcoin. And looking at it, it's interesting the way that there's some manipulation I think within the Bitcoin price due to Grayscale Trust, because they're buying a third of the Bitcoins on the market, or they at when Bitcoin was not over 25K, they were doing that. I think they recently stopped. They may have picked it back up. I'm not really sure. I stopped following it as much because I was up 225% and sold. Uh,
That's
but
extraordinary.
I was very happy. Go Bitcoin for that reason. Or go Grayscale. But basically, uh, when you're looking at that trust, if they're buying a third of the Bitcoins on the market, it makes it hard for Bitcoin not to go up almost because they're just like they're the ones buying, so they're the ones setting the price up. Um, and my curiosity is, let's say retail investors pulled out of Bitcoin, or certain portions, or people started to pull out, and Grayscale didn't. Are they just going to continue to buy more and more on just buy the dip, or are they going to stop buying at some point?
Yeah.
Because if they keep buying, I don't see it makes it difficult for Bitcoin to even go down. because
Yeah.
someone else, they're literally just the institutions just buying the whole dip.
Yeah, I couldn't agree more with that logic. It makes entire sense. I mean, if one trust, one ETF is buying up a third, I didn't know that, a third of all Bitcoin outstanding in circulation. That is crazy. And I know there's a lot of relation between Grayscale and CNBC.
Mhm.
In fact, I know that starting only recently, the Bitcoin, you know how they list out on the bottom, the tape above that is the Dow, the S&P, all the indexes.
Yeah.
But now they've actually this year included Bitcoin price. But they did that in 2017 also. Uh, but then, of course, in 2018, they took it down because nobody was interested in it. It went back down into, you know, like 3,000 or
Yeah.
something. Nobody wanted it.
Mhm.
And now that resurgence of hype has come clearly again, bigger and better than before. And CNBC has decided clearly there is some contractual advertising agreement between Grayscale and CNBC. There has to be, because the retail investor, also, if you look at CNBC, there's not one bearish, at least from what I've seen, there's
Mhm.
not one bearish, um, you know, interpretation or opinion on Bitcoin. Everybody on that show is bullish. So they're completely biased, and I think the moral hazard will speak for itself as time goes by.
Yeah, I didn't even know that connection, and that you kind of got my mind blown a little bit there. I'm like, oh wow, like CNBC is just running up Bitcoin then because they own Grayscale or they have shares in Grayscale or whatnot. That's definitely some, like, between that and the third of the Bitcoins on the market, they're definitely driving the hype and to a degree market manipulation. I don't exactly know what Grayscale is going to do. I know that a couple weeks ago they were like, we're not going to let people buy in for a little bit, and they were going to stop buying Bitcoin. So maybe they're letting it ride a little bit right now. I'm not really sure. But it'll definitely be interesting to see where it goes. I do think we see a dip below 30K, maybe a retrace to 25K. If we saw that, I think that would really determine if it goes up, if it goes back to, if it rallies, if it goes down to 25 and rallies back, I think that we see 50,000. If it goes down and then keeps going down, I think we see 50,000 in 2025 or 2030 rather than, and see another break from the Bitcoin investors and a lot of unhappy people, of course, after that.
Yeah, I mean, that sounds about right. That sounds about right, Richard. So, for the sake of time here, we're running a little bit short. So, shall we just end off here by, you know, if you want to tell people where they could find you and your work and your research, you know, just go ahead. And I'll obviously put all that info down in the description of this video so everybody can access it.
So you'll find me on Seeking Alpha under the alias The Peanut Investor. It's an ode to my high school nickname. And you will find me on LinkedIn at Richard Nelson. It's a nice picture of me sitting in a suit, you know, casual. And I'm always happy to talk to people about investing and discuss the markets and what you believe will happen and what I believe will happen. You know, I love to hear other opinions, different stock picks. Just, you know, I'm always loving to research this stuff. It's something I'm very passionate about. So I look forward to hearing from you guys all. And Max, thank you so much for being letting me come on this show. It was really a fantastic opportunity and a pleasure to be here.
Thank you, Richard. Thank you for coming on. We had a really great conversation tonight, and I'm really happy about it. I'm looking forward to a whole lot more with you.
Me too. The future is looking bright for our little club.
It sure is. All right, man. Take it easy and have a good one.
You too. Have a great rest of your weekend.
Thanks.